Hi, accounting students. It's Mrs. Bloomquist, and we are moving on through to Chapter 11. This is Lesson 2 in Chapter 11. Remember, if we think back, Lesson 1 was dealing with accounting for purchases transactions using a general journal. Lesson 2 is going to deal with recording sales transactions using a general journal and how we track that activity. So the lesson objectives for this particular lesson: to account for sales returns and allowances, post a general journal to the accounts receivable ledger and the general ledger, and to record a correcting entry to the accounts receivable ledger. So one thing that you want to pay attention to with this lesson is that we have just a few vocabulary items that we want to deal with. First of all, sales return, which would be a credit allowed to a customer for the sales price of returned merchandise. Now, this results in a decrease in accounts receivable. Another thing would be a sales allowance. This is a credit allowed to a customer for part of a sales price when merchandise is not returned. So this also results in a decrease in the accounts receivable. So we'd want to think about return, when people return things. An allowance is when they don't have to return things and we give them a discount. And finally, we use a credit memorandum to record or note returns and allowances, because we definitely need to have source documents for all of our transactions. Right here we're looking at a credit memorandum, and it's showing that 3 18-watt power tool batteries for the amount of $21.95, totaling $69.80. So as we look at this, I'm guessing we can identify whether or not this would be for a sales return or a sales allowance. We want to make sure that we know how to journalize sales returns and allowances. So the first thing we're looking at here: granted credit to Lake Automotive for merchandise returned for $65.85 plus the sales tax. So sales and return allowances are going to be a debit of $65.85, and then also a debit to sales tax payable, and we're going to go ahead and credit accounts receivable using credit memorandum 14. So when we look at the general journal item here, you can see we go ahead and record the date that this happened, the first debit title and the credit memorandum number, the sales return amount, and then the sales tax payable debit. Finally, then the accounts receivable for Lake Automotive in the amount of $69.80. Now, posting from a general journal to accounts receivable ledger, we're going to go ahead and take that information from the general journal, and we need to go ahead then and okay, so sorry, I got interrupted. I had to pause my recording there. We're going to go ahead and we're going to post from the general journal to the accounts receivable ledger. And remember that we're dealing with Lake Automotive here. So on the 16th, from page 12 of the general journal, we're going to go ahead and post a credit for $69.80, which reduces the debit balance on the accounts receivable ledger. Remember then, we always want to make sure we have good record keeping for an audit trail, and this is customer number 130, so we're going to make sure we post that back on the general journal. All right, so correcting errors in a subsidiary ledger account. Now, we are not perfect creatures, and occasionally we make mistakes when we're posting transactions and monitoring our activity. So on December 26th, it looks like we found that a sale on account to Skinner College was incorrectly charged to the account of Wells Apartments for $334. So you can see in our general journal that we're going to be posting on December 26th a debit to Skinner College and a credit to Wells Apartments. And we're using M44 because it's memorandum 44 that we're noting this on. So for our Skinner College, we're going to go ahead and post a debit, and for Wells Apartments, we're going to go ahead and post a credit. Okay, now when you're doing errors, you want to always make sure that you accurately record the date that you found the error, the name of the correct customer and the document number, the debit amount, the name of the incorrectly charged customer goes below because that's who we're going to go ahead and credit. And then you would make sure that you update and post the correct amounts into those subsidiary ledger accounts. Okay, and always note, for good record keeping, we need to make sure that we can tie back and have a good audit trail. So this information is found on General Journal, page 12. We also want to make sure that we post the correct amount as a debit or a credit, and then have a good running total in our subsidiary ledger account balance. And finally, we're always thinking through that audit trail. We want to correctly record our customer numbers back to the General Journal. All right, so if we're going to go ahead and do this audit our understanding stuff, the difference between a sales return and a sales allowance. Remember, one is when customers return merchandise to us and we credit them. The other one is when they don't return merchandise to us and we just give them a discount. And you know, sometimes when you're operating a business, it doesn't make sense to have customers return the merchandise to you, depending on either how badly it's damaged, or you might not be able to sell and repair it, or it might just be a reduced quality issue and with a slight discount a customer is happy. So there are times when it makes sense to do an allowance instead of a return. The source document for journalizing sales returns and allowances, that would be a credit memorandum. Why are sales returns and allowances not debited to the sales account? And this is kind of a good key piece of information. You want to make sure that you're accurately recording how much you have in sales, and you want to make sure you have a good total amount or good information on how much people are either returning or discounting. So we want to make sure that we can keep those two things separate and not just post all returns back into the sales account. Which general ledger accounts are affected and how by sales returns and allowances? So sales returns and allowances and sales tax payable are going to be debited, and then the accounts receivable is going to be credited. All right, that is it. One of the things that you probably want to be thinking about related to this lesson would be the kinds of return policies that a business might put in place. But then also something that's really key for a business would be the consequences if the accounts receivable ledgers were not kept current on a very frequent basis, and what that actually might mean for the business. That's an idea that's probably pretty significant that we carry forward into our next lesson and for this chapter in general. All right, so from here, go ahead, do those forms online, and then go ahead and do the work together and on your own in Applia, and then move forward into 11-3. Good luck.